it's not going to be a good thing if this goes on. It can have a grave impact to both Canada and US. I think it's about 150 billion in products as well that we're going to be putting retaliatory tariffs on.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. And now, here are your hosts, Paul Stevenson and David Warren. Hello and welcome back to the Ottawa Real Estate Podcast. My name is Paul Stevenson. I am joined, as always, by David Warren. We are both mortgage agents, level 2, and we are here to bring you the latest and greatest in all things Canadian real estate. And apparently we are now tariff experts. We're going to be touching on everything today. So thank you for tuning in. As always, just a friendly reminder, if ever you have questions about mortgages, real estate, things happening in the market, you can always reach out to David and I. Our contact information's in the description, and we're here to help. So David, how are you? You're in paradise. Talk to me.
I'm doing well. Yeah, down in Cancun right now with a number of agents, kind of our annual trip. So yeah, it's good.
Yeah.
Got here Saturday. Yeah, I mean, it's, can't miss a show. Can't miss a show, especially when we got trade wars going on.
Yeah, what's the vibe in Mexico? How is the Mexican community feeling about these?
Yeah, nobody
pending tariffs?
Other than our group talking about it, nobody is talking about it or seems to give a shit. But I know that's not the sentiment, and I know that's not the case by and large.
Yeah. You're a bit insulated on the resort.
Yeah.
You're not getting the true opinion.
Exactly.
Oh, you're from North America. We love you guys. You guys are from, sorry, I guess they're also North America. You're from more Northern America. Awesome. Great start. So I have to apologize because I fully believe that the tariff threats were completely posturing. I mean, we talked about it for the last 2 weeks. I've read one article today. I know that everything is supposed to be kind of initiated tomorrow, but I've read some articles saying it might be delayed till March 1st and so on. So as of today, technically we're not wrong. They haven't been imposed yet, but tomorrow, we're recording Monday this week. Wednesday, when this is released, likely will be imposed and my foot will be in my mouth. So I just want to tell everyone I took full ownership. I was wrong. The tariffs are coming. And we're going to get into kind of how we see those impacting the market. And they've already started impacting the market.
Yeah, there was actually yesterday I was speaking with someone that's on the trip here who is a large-scale trader. And he was saying that all of his institutional clients that have any goods where they sell to the U.S., that they actually shipped a record number of products to the U.S. already and purchased a record number of products in anticipation of kind of a trade war and impending tariffs that seem to actually look like they're going to be going forward, which is also interesting as well because we still have there's still a free trade agreement between Canada, US, and Mexico, and this is kind of completely going against that contractual obligation, also going against what's outlined in the UN Charter between countries. So it's really interesting. It'll be obviously it's not good for either country. And yeah, kind of interested to see, not interested, but yeah, I don't really know where this is going and how long it's going to last for. Like you said, there's still a chance that a deal is brokered in the next 24 hours before it's supposed to come in to effect. But yeah, I think we're going to see big repercussions, reverberate throughout the economy. And we're already seeing it this morning, Monday morning. I mean, the market opened up and bonds have really kind of fallen through down, based on almost 20 basis points already, only 10:30 a.m. on Monday mornings. Yeah, what that'll do to what it's going to do to the economy, to the to the real estate rates, and BMO is already, if this goes on as far as the tariffs are concerned, Bank of Montreal is saying that by summer they're expecting the Bank of Canada to make some huge drops in bank prime as a result to help kind of stabilize the economy and protect us from a full-fledged recession.
Yeah, I saw somewhere, I think it was on Twitter, they were showing kind of they have the 5 or 6 major banks and kind of what their estimations are for the year. And one of them was saying now, I think one of the banks was pricing in 1.5% drop now in the overnight rate, which would bring the overnight rate down to 1.5, which would be very interesting. That would be almost, we were saying that we'd never see those rates kind of in the low 3s, high 2s again. But I mean, the outcome of these sorts of changes could drive us that way. I mean, if these tariffs persist, now awful time for us not to have government right now with all this stuff kind of pending, but all this is just going to make it even like, it's going to force the Bank of Canada, as you said, to drive rates down. We've already seen the bonds come down a half point today. Like you can see on that chart we just showed, complete fall off, like cliff off the edge from where we were Friday. Interesting article today in the New York Times that kind of summarized all of the tariff talk. So if you're okay, I just want to kind of go through these bullet points. It kind of goes over everything line by line. I think it's a really good summary of what we can expect. So it says President Trump signed executive orders imposing sweeping tariffs on Canada, Mexico, and China. The tariffs will take effect at 12:01 Eastern on Tuesday. So by the time this comes out Wednesday, this will be in effect, unless again something comes in the next 24 hours. Canada, Mexico, and China account for over 1/3 of U.S. imports, impacting millions of American jobs. The scope of the tariff. So Canada and Mexico, 25% tariff on all goods except energy products, which have a 10% tariff. China, it's 10% tariff on all imported goods. Wild that we're 15% higher than China, but I'm not imposing these tariffs. Industries most affected: auto and electric equipment for Mexico, mineral processing, Canada, and U.S. farming, fishing, metal, and auto production. Impact for consumers. So companies may raise prices to offset higher import costs. That's almost a guarantee. Some may absorb the tariffs and negotiate lower prices with suppliers. Past tariffs on China showed that costs were largely passed on to American consumers. And I think that's a lot of people that are really for the tariffs are kind of overlooking that it's going to increase their cost of living pretty dramatically. Inflation and price increases. So short-term impact, grocery prices. So avocados, cucumbers, tomatoes, they could rise within weeks. Mid to long-term impact, durable goods such as cars and so on may take longer due to existing inventory. Canadian energy tariffs could increase gas prices, especially in the Midwest. Analysts warn of inflationary pressures and slower economic growth if tariffs remain in place. Trump's justification, he claims that tariffs are needed to stop illegal immigration and drug smuggling from Canada and Mexico, invoke the International Emergency Economic Powers Act to justify the move. And our response, Canada and Mexico's response, was that both countries plan retaliation with their own tariffs. Canada may target Florida orange juice, Tennessee whiskey, and Kentucky peanut butter. Mexico's President Claudia Sheinbaum has also signaled potential retaliatory measures. So, all this to say, key takeaways: higher consumer prices, especially for groceries and gas, which, I mean, we've been seeing that for years now, but this will just amplify that. Increased inflation risk despite recent economic cooling. Canada and Mexico are going to retaliate, potentially escalating a trade war, and U.S. companies face uncertainty about long-term impact. So we've already seen this kind of come into effect. Recently, Canada talking about reverse tariffs. We've seen the LCBO here in Ontario has removed all, at least this is what I've seen online. I haven't been into an LCBO in the last 3 days, but they've removed all U.S. products from their shelves. I know you're not here either, so neither of us can vouch for this right now, but this is what I've seen on major news networks, that they've shown the shelves saying, buy Canadian products, even with grocery stores now, kind of highlighting which products are Canadian, which ones are American. So I think if this continues, I mean, a trade war is almost inevitable. Yeah, I don't know. I don't know enough about the economy. I have like a very high level understanding of what's happening. Obviously, real estate being our kind of area of expertise. But I do feel like you have maybe a broader understanding of all these impacts, just given your education, your experience. So how do you see the next, say, 6 to 12 months going? Best case, worst case?
I mean, the hope is that it's not long-standing and that it is something where it's just, like we talked about before, but, really be posturing for negotiation. The U.S.-Mexico-Canada agreement, which replaced NAFTA, was negotiated when Trump first came in his first round in office. They scrapped NAFTA, renegotiated to the new agreement, which is up this year. And I think we mentioned it last episode. So, about that, I think this is a lot to do with that. And there was a conference this morning that I was reading, some comments from him that was an interesting take, that through the campaign, Trump was kind of rallying on getting rid of personal income taxes and all these other measures of taxing Americans. Well, that's revenue to the government that they need. And so where are they going to get that from? And that's going to be, from tariffs and things like that, like you said, from other countries. So I don't know if that's, the angle he's going, if it's, just strictly for that new agreement. Certainly, there's obviously immigration issues on both sides of the border as far as like drug trade, that's always been there. But, we also see all of our firearms come all from the US illegally across the border. So it's not exactly like they have a sound border either in that regard. So, but yeah, I'm just overall, it's not going to be a good thing if this goes on. It can have a grave impact to both Canada and US. I think it's about 150 billion in American products as well that we're going to be putting, retaliatory tariffs on. Canada supplies most of the northern states with their electricity. Quebec powers, all of those those northern US states, same with the Maritimes. And, we supply a lot of oil there. Yes, they refine it, but a lot of oil comes from Canada. So yeah, I think, it could really kind of turn us into, we've had a very stagnant economy, and even, per capita, a negative GDP. I think November was actually a negative. The GDP fell short of expectations and the largest decline since December 2023. With our economy where it is, combining with something like this can really have significant impacts where, yeah, I mean, I think it really will hit people from a jobs perspective and savings. And we're seeing in the Canadian dollar kind of, plummeting, where our dollar's terrible right now, which does not help things either. I guess the silver lining for people that have mortgage renewals coming up, the rates are going to tank, like you said at the outset. If the bank does drop to 1.5% as the lending rate, that's a drop. Right now we're at 3.25% as the overnight lending rate, 5.2% as the bank prime. So if it drops to 1.5%, that's a further 1.75% drop by the summer, is what BMO is expecting, or their chief economist, if this does continue or come in. I mean, I guess the silver lining is that's going to really help people with their mortgage renewals and existing mortgages, but that's really the only kind of, silver lining, if you will.
Yeah, it'll be interesting to see, I think, how the banks react to this drop in the bond rates, because, we had seen fixed rates kind of creep up over the last month or so, and just recently had they started to creep down like ever so slightly. But this drop now is pretty substantial. Half a point is, I mean, that's a huge drop. If you literally fell off a cliff, as you can see from that graph that we showed at the very beginning. So I would say what we may see now, this is kind of convenient timing leading into the spring market, as you were talking about too, with all those renewals coming up in the next 12 to 24 months. This could actually be a saving grace for a lot of Canadian homeowners, where we might see rates fall under that 4%. Probably very likely we will in the next month, I would say, if the bonds stay where they are, right? So it'll be interesting to see how that translates into maybe relief for Canadians, as opposed to, the cost of living might increase everywhere else, but they might save on the mortgage, right?
Yeah, no, exactly. So, I mean, time will tell, like we said, whether the hope is that none of this actually comes into effect in 24 hours, but the likelihood of it happening is obviously almost assured, it seems. But yeah, I mean, time will tell. By next week's episode, we'll have a clearer picture.
Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Geltin Poirier Avocats Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at geltinpoirierlaw.ca. Let's get to the heart of your deal. Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big. Protect what matters most. Are you trying to grow your mortgage business? CENTUM has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with CENTUM. Learn more at joincentum.ca.
And now you said there was one other thing that you wanted to talk about with regards to the capital gains.
Yes,
tax
on Friday. So there's a lot of CRA wasn't really sure what they were going to do. CRA came out with the increase to the capital gains tax inclusion rate, where it was announced in the 2024 budget that it was going to increase to 66%. And we saw in May a number of people, even selling cottages, figuring that out because it was, going to be related to second homes and things like that. And it kind of pushed a lot of people, but it never actually passed through Parliament. Government's been prorogued. CRA said, as recently as a couple of weeks ago that they were going to, even though it wasn't law, they were going to act as if it was, which is really odd. So they were going to be went for everyone filing, kind of move forward as if it was. Now, as of Friday, the interim finance minister came out and said, no, we're pushing the decision or the start of it until 2026. Obviously, it can't pass through Parliament. There's no government sitting. And, he even basically said there's a high likelihood of a new government coming in that's going to scrap it anyway. So it's kind of just, been completely scrapped, if you will.
Yeah. Yeah. So this was Canadian Mortgage Trends had an article kind of summarizing it. And it says, this is kind of the bullet points that I took away. It says, despite the deferral, related tax measures are proceeding as planned. So principal residence exemption remains intact, keeping home sale profits tax-free, which we all knew. $250,000 annual threshold, which is now going to take effect January 1st, 2026, ensures individuals with modest gains continue to benefit from the 50% inclusion rate. Lifetime capital gains exemption increases to $1.25 million on June 25th of 2024. So that was last year, benefiting small businesses and farmers. Canadian Entrepreneurs Incentives starting 2025 reduces the inclusion rate to 1/3 for up to $2 million in eligible gains, scaling up to $6.25 million by 2029. Lots of uncertainty, David. It's I was actually laughing about this earlier, just talking to Sandra about just the economy in general and plans and so on. And it was just like, there's so many unknowns right now, like our government not sitting, obviously these tariffs, like these sorts of things being extended, an election coming out, like just I've never been more unclear about what's coming, So it's scary, but I think also, especially in our business, I do think it will create opportunities. I think the lower interest rates is going to bring a lot of people back to the table, even if there's all these impending doom and gloom type scenarios. I think at the end of the day, if home prices remain the same or come down slightly and people can qualify for more at a lower interest rate, get more for their money and so on, it is going to drive the market, the housing market, at least. There's no guarantee of this. But as we saw during the pandemic, beginning of the pandemic, there was, remember at one point, people couldn't even do open houses because you weren't allowed on site. And we were thinking this is going to crush the real estate market. And it did the complete opposite. Everything kind of escalated because money was free, essentially. And home prices were starting to increase pretty rapidly because there was such a lack of supply. So do you think we could see something like that again? Or let's say rates do come down to the kind of, mid threes, high threes. Do you think that'll be enough to drive people back to the market, or is it still going to be a wait and see?
I think I would be surprised if it's like a flood of people back to the market. I think, like you just said, I think if there's that much uncertainty of people, let's say this tariff, thing kind of prolongs and starts affecting the economy, affecting people's jobs, people aren't going to be as apt to, buy. However, there are going to be those people that see it as an opportunity and will action it. But I think by and large, like people, I don't know, we thought a year ago as rates started coming down that, people would, and the Bank of Canada starting to lower rates this past year, that, people would be coming back quicker to the market than they have, which has been surprising. I think with something like this, I think the uncertainty will kind of keep people on the sidelines. But yeah, I don't know. I can't say whether I could foresee people flooding back. Like you said, I would never have expected what happened during COVID to happen as far as like sales activity. So yeah, I really have no idea, but I think people will be more, my opinion is I think people will be more cautious and slower to react. But again,
we've been wrong before. Hey?
Oh yeah. And we'll be been wrong before.
And
we'll be wrong again. Yeah, 100%.
Speaking of the pandemic, I actually I got a message from one of our listeners, some feedback, and I wanted to read it because last week we read one of the comments from someone who was basically shitting on us, saying that we're liars essentially. So he felt bad. He said, I want you guys to know that you changed my life, was how he let off with this comment. So I said, well, tell me more. I always love hearing about lives change. So here's kind of a summary he put together voluntarily for me to read. So I'll just give everyone a quick sip of the fire hose here. It says, around 2010, I read Rich Dad, Poor Dad by Robert Kiyosaki. Great book. And in 2012, I bought my first income property on Abbey Road in Ottawa. The house had been abandoned and took me 3 years to complete the renovations. In 2018, I purchased my second rental property on Weston Road. I later used both properties as leverage to buy our family home and cars, which also had a granny suite rental. In 2019, we welcomed our first child, and then COVID hit in 2020. I took parental leave to care for our son during the pandemic, and it was during this time that the Ottawa Real Estate Podcast changed my life. Listening throughout 2020 and 2021 kept me informed about the Ottawa market. With temporary freezes on hydro, Enbridge, and property taxes, I had two key realizations. One, there's no such thing as a free lunch, and those missed payments would eventually be recovered, though I didn't anticipate interest rates rising the way they did. And two, my house on Abbey Road was nearing $1 million valuation as I had projected. In May 2021, we sold Abbey for $833,000, and in June 2021, we sold Weston for $765,000. I used a significant portion of that money to pay off most of our current mortgage and reinvest in renovations for our family home, all while still on leave with our two kids. I realized that using my time for renovations and raising our kids was more valuable than aggressively paying off a mortgage at just 1.9% interest. Thanks to the Ottawa Real Estate Podcast, my family and I were able to make sound financial decisions, avoiding many of the challenges brought on by rising interest rates and shifting market conditions. You guys truly changed our lives, and we're incredibly grateful for the work you do. Much love, Sean.
I'm not sure I consider that. I guess pat ourselves on the back. I don't really. No,
I'm going to read that before bed every night, just so that. No, thank you, Sean, for the feedback. And it is the one thing I said to him is that it's one of those things where you and I, we show up every Tuesday. Typically, we record for 30, 40 minutes, and then we just kind of go back to our day-to-day life. We don't really think much of it. So when we hear feedback from people, it does actually make us realize, there's someone actually listening to this on the other end.
Yeah.
Hey, it's not just us talking into a microphone to each other every week, as it seems. So thank you, Sean, for that. And thank you to all of our listeners. Honestly, good and bad feedback. The conversation is really what we're looking for. I mean, this is our insight. This is what we're seeing. But where the value really comes from is the interaction with you as a listener, so that we're seeing also what you're saying. We're getting different perspectives, and it broadens our horizons and also gives us more information that we can provide to you, like more intel as to what you're looking for, so we can provide it to you. So anytime you have feedback, whether it's good, bad, definitely make sure to leave comments. We do read all of them. We try to respond to as many as we can. And even on last week's show, there was a few that there were great comments. One here from Kathy Pennington says, "What do you mean the real estate market is crashing? In which way? Is it bad for people that are mortgage free? Is it bad for selling your home?" I live in Oshawa. So listeners from all over, I would say the market, I don't know if we said it was crashing. That was probably the title that said that the market was crashing, and it was more of a question. I would say, in 2025, there's a lot of unknowns. I would guess, as we said, in our first, I think, second episode of this year, I think home prices will climb about 3% for the year. I think that's going to be a fluctuation of up and down. But in the end, I think we'll see about a 3% gain. So I don't think the market is crashing. I think rates certainly are going to creep down, which is great, I think, for people looking to get in or people renewing. But if you're mortgage free, probably won't impact you unless you're looking to sell your home. If you're just staying in your home and nothing's changing, then, other than our dollar decreasing, I don't really see this impacting you too much.
Yeah. Another comment that was on there was actually talking about, or was it? Sorry, about CRA. My comments last week about CRA and me saying that we have more employees CRA than IRS, for which
you want to read the comment?
I was trying to find it.
Yeah, it's by Mark B. He says, "Your argument about PP, which is Pierre Poilievre, cuts is flawed. Even if he doesn't cut public servants, you acknowledge contractors will be the first to go. Where do you think these contractors live? Agree the government is far too fat, but your comment that the CRA has more employees than the IRS is incorrect. CRA has 40,000 and the IRS has 78,000. I think you meant that the IRS is 4.5 times more efficient. One CRA employee per 1,000 Canadians versus one IRS employee per 4,480 Americans. Housing prices in Ottawa would definitely decrease if the government stopped meddling. Fundamentals are broken and all they do is kick the can down the road. It's funny, you just used that term yourself. I think there will be a reckoning, even if it presents as a lost decade rather than a decline. In real inflation-adjusted terms, housing is crashing.
Yeah, so both he and I were wrong, or are wrong, as far as employee numbers. When I read this, I went and did a little fact-checking. So CRA has 60,000 employees, so not 40,000. And the IRS is 82,000. So they have 22,000 more IRS employees. However, the U.S. is 335 million versus our 40 million. So the U.S. is 8.375 times more populated than Canada, yet only having effectively 33% more IRS employees. So both he and I are right and wrong. They are much more efficient to us, and that's where, kind of more so getting at the topic last week is really just, we have a lot of inefficiencies within government. Those contractors, where do they go? Yeah, they go to other industries. They keep doing what they're doing, but maybe for other companies. At the end of the day, government employees, their income does not contribute to our GDP. We all as Canadians complain about, and we are taxed heavily, and that's because of having in a lot of cases, too large of a government where our revenue goes to. So in order to decrease taxes, which then puts more money back into people's pockets, then the only way of doing that is by becoming more efficient. And some of that might be, will be right sizing or downsizing that government.
Yeah, what'll be interesting is if, believe it or not, if Trump's policies work and the U.S. government does become extremely efficient, that's going to drive a lot of investment into the U.S. as well. So it'll be interesting to see, like, over the coming 24 months, what happens with their economy as well. Because nobody really knows, like, this has never happened to this extent where, there's literally a trade war between three countries that are all connected right beside each other in North America here. So, I think there's a lot of things that people maybe, like, a lot of offshoot impacts that people are not considering that, who knows? Who knows, David? I'll leave it there. You make your own decisions. Let's get into the mood boost.
Let's do
a lot
it.
of tariff talk, a lot of back and forth here. Okay, so I got 3 today. Number 1, and Tim's back. Our brother's back, so we got
better content. We got better joke.
Yeah. Number 1, I had a happy childhood. My dad used to put me in tires and roll me down hills. Those were good years.
Good year tires. I like it. I like that one.
And number 2, you can't plant flowers if you haven't botany. If you haven't botany. A lot of play on words here. And number 3, I'll do algebra, tackle geometry, maybe even a little calculus. But graphing is where I draw the line.
Okay. Not bad. I like the first one the most.
Pretty good. Pretty good. Thank you, everyone, for tuning in. David, enjoy Cancun. Get home safely, most importantly. And thank you, everyone, for tuning in. Thank you to our sponsors, Gerté Poirier, Avocat Lawyers, amazing real estate lawyers. We also have CENTUM Canada, our umbrella, our partner. And lastly, Big Insurance in Westboro. Thank you so much to all 3. And thank you to you for listening. We'll be back next week. Have a great week. Deuces.